The bull flag pattern is one of the best patterns in the trading, but unfortunately most people don't know how to trade it correctly. So in today's video we're going to take a look at exactly how to trade the bull flag, and we also look at how you can combine it with indicators to improve the win rate. Sounds good? Let's get started. So first, think. How do we identify the bull flag? Step number one is to find a strong move towards the upside. Preferably this move should contain momentum candle like right here. This is what we call the flag pole. The next step is to find a short consolidation, or in other words, a short move that goes in the opposite direction of the flag pole. This move is what we call the flag. The flag can contain as little as just a few candles to 20 or even more in very large trends. The most common entry point is when the price breaks above the upper resistance line, but some traders prefer to buy the support, anticipating the breakout. The stop loss is usually set below the lowest point of the pattern, and a common way to the big profit is to measure the move towards the upside. You take this exact measurement and you measure from the low of the pattern. You adjust your target level up to this point. Another method for traders is to use a fixed risk to reward ratio such as 2. Now, let's open up a very important indicator that you should use together with the bull flag. So let's go up here to the indicators tab in the trading view and let's simply search for volume. As you can see, we have many different volume indicators, but we want to open up the simple one called volume. During the initial move towards the upside, you want to see rising volume, and during the flag, you want the volume to decrease. And most importantly, when the price breaks the bull flag pattern, you want to see a sharp increase in the volume. And in this case, you can see that the volume increase of the breakout candle is very clear. This is very good sign. What you also can see is that during the move towards the upside, the volume keeps on increasing, which is yet another bullish sign. Now let's open up another tool. Go to the upper left corner, press the Gann and Fibonacci tools, and open up the Fib retracement. Just start the Fibonacci from the lowest point of the flagpole and drag the Fibonacci up to the highest point of the flag. Most bull flags will reverse in this area right here, between the 0.382 to 0.618 Fib retracement. Last but not least, let's open up another indicator, and this is for more advanced trading. So let's go up here to the indicators tab in TradingView and search for here is MACD and open up the standard MACD or moving average convergence divergence indicator right here. Now, when we got the indicator on the chart, we want to change a few settings. So we navigate here to the settings tab for the MACD and uncheck the MACD right here. And also uncheck the signal line as well. And now we are ready to press OK. What we want to look out for here is the price is printing a higher low and the histogram of the MACD to print a lower low. This is what we call a hidden bullish divergent, and they can be pretty hard to spot. So don't worry. If you want to, feel free to pause this video now and study this one for a bit. But what a hidden bullish divergent basically does is that it indicates a continuation to the upside. So that is yet another bullish sign you can use together with the bull flag pattern. If you guys are interested in diving deeper in the indicators world and how to use them, I highly recommend you all to watch this playlist next. Bye.